All right, Road to a Million podcast listeners, welcome back. This is George from Edge-Forex. Today we're about to unpack the biggest event for FX markets this year, the US election, and how it's colliding with a major shift in the Fed's policy. If you're in Forex, the next few days could be the kind of volatility cocktail you live for, or the one that wipes you out if you're not ready. So grab a coffee, buckle up, and let's get into it. Here's the deal. The Fed's in rate-cutting mode, the yield curve is as twisted as it gets, and we're heading into a high-stakes election. Markets are on edge, and the dollar? It's facing a tough road ahead. We're talking scenarios where each election outcome could send USD, GBP, and JPY in completely different directions. So, what should traders like you watch for? Let's break it down. Let's set the scene. Right now, the Fed's been dialing down rates, aiming to ease pressure as economic growth shows signs of cooling off. The Fed funds rate is down to 4.83%, while Treasury yields, both the 2-year at 4.16% and the 10-year at 4.28%, are still high, but they're under pressure. It's like the markets are saying, something's got to give here. And with the election just around the corner, that something could be the dollar. All right, let's dive into the different election scenarios. I'm about to walk you through 4 possible outcomes and the FX fallout for each. Hang tight, because this is where things get real. In a full Republican sweep, the markets would be expecting tax cuts, deregulation, and a more aggressive fiscal stance. That means the dollar could initially strengthen as traders go risk-on, anticipating stimulus measures. But here's the kicker. If the Fed's still easing, this could quickly turn into a tug-of-war between fiscal stimulus and monetary policy. The dollar might surge, especially against yen and peso. But watch out, this could be a short-lived rally if markets start worrying about deficits. USD-JPY and USD-MXN will be your high-volatility pairs in this scenario. Now, if Trump wins but Congress is split, it's a different story. Without full control, you're not likely to see sweeping fiscal changes, and tariffs could still be in play, especially for Mexico. In this case, the dollar might stay range-bound as yields hold steady, and USD-MXN could face tariff-driven pressure. Yields would likely be stable, and the Fed's rate cuts could keep a lid on any big dollar moves. A less volatile but still unpredictable setup. If Harris wins with a split Congress, we're looking at more of the same. No big fiscal shifts, which means the Fed's easing policy takes center stage. This is where the dollar could start to feel the weight. If there's no major stimulus coming from Washington, the Fed's cuts could push yields lower, and we could see USD-JPY drift down as the dollar weakens. This is the safe haven play. Yen strengthens, dollar eases, and volatility simmers down a notch. Now here's the wild card, a Democratic sweep. This outcome would shock markets, potentially bringing in corporate tax hikes and a regulatory push. The dollar would likely take a hit as investors worry about growth prospects. Treasury yields could drop sharply as the market braces for weaker growth and more Fed easing. This is where you'd see the dollar weakening across the board. USD-JPY could plummet. USD-MXN might rally as tariffs are taken off the table, and CNH could surge on relief. The Fed's cuts would amplify this dollar dip, pushing yields lower as well. But this isn't just a dollar story, folks. The pound is also closely watching what happens to US yields. With the UK's own economic struggles and a stagflationary budget backdrop, sterling is super sensitive to moves in US rates right now. If we get any sharp moves in the dollar or US yields due to the election outcome, GBP could get tossed around. Keep an eye on ERGBP, which has been volatile since the UK budget announcement. This pair is in the spotlight too. So what's the game plan here? This election is more than just a political story. It's an FX earthquake in the making. If you're trading, prepare for volatility spikes in USD, JPY and MXN. And keep a close watch on sterling, especially if US yields start shifting. And remember, markets could react as soon as polls close in swing states. Don't get caught off guard, especially if this turns into a drawn-out counting process. You want to be nimble here. All right, traders, listen up. With the Fed easing and election uncertainty looming, now's the time to get your strategy locked in. Set your stops, hedge where you need to, and be ready for anything. Markets are primed for fast moves, and only those prepared will come out on top. Timing's everything here. This is George from Edge-Forex reminding you the FX market is about to hit turbulence. Next week could rewrite everything we thought we knew about 2024. Stay sharp, stay informed, and stay on the edge of the action. I'll catch you on the other side of election night. Until then, trade well, and if you haven't subscribed as of yet, well, what are you waiting for?